Well, thanks. So I think everyone knows me, and the only thing I added to this slide for tonight was that I've been mining since 2021, and I brought in a machine here, an old S9, which is made by the largest mining manufacturer in the world, Antmain in China, and I don't plug it in anymore because I was telling Jim, it uses more electricity than it's really worth in Bitcoin. And I think you all have seen this slide before as well about what is Bitcoin. But what it's really related to in terms of our mining and why are we talking about mining is that mining replaces the central authority that we have in all of our other financial instruments. It replaces our banks. It replaces our custodians. It replaces all of the trusted third parties that we rely upon to keep track of Bruce owns this and Donna owns that and Mark owns this, the ledger of who owns what. And when we pay someone, okay, our money goes from me, to Terry, and it keeps track of all these things. It's the ledger. So Bitcoin operates without this central authority, which is really something new in human civilization. And it's all made possible by mining. And there's a famous computer science problem called the Byzantine generals problem. And it's a story about these generals would surround a fort, and how would they know that they're actually getting an accurate message from their ruler to go attack? Because no general would want to take him and his troops into battle against a fort by himself or herself, because you don't have the benefit of everybody else. So how can you ensure that messages are legitimate? And how can you ensure there's a coordinated attack without any trust in, is the messenger corrupted? Was the messenger bribed?
Are they trying to trick me to go in when they're really going to retreat?
Exactly.
Something weird.
And the Byzantine generals problem, it reminds me of the movie Trading Places from the 1980s with Eddie Murphy and Dan Aykroyd. At the end of the movie, they get the report on frozen orange juice. What's going to happen to this season's crop in Florida, right? Oh, it's going to be a great winter, or it's a bad winter. We got to sell. And of course, they got the wrong message, and they lost a fortune because they had the wrong side of the bet. So the same problem exists in a decentralized ledger where we don't have anyone to trust. How can we trust strangers when we're transacting with each other without having a central authority? And so mining solves this problem. Do you want to add anything to this, Amy, since you suggested?
I just
slide.
Yeah, it's kind of a hard concept to grasp, and I still would have a hard time explaining it. But if you just start talking about mining, and it's like, well, why are we even doing this? What's the point? Because we're spending all this electricity, and I mean, I think the point is that when you're writing a transactional block and you want it to be immutable and you want to trust that everything in there is correct and nobody has the authority, then you come up with this mechanism whereby someone has to do a hard work that's going to cost them money to do something, and then once they've accomplished that hard work, they've discovered the secret number or whatever.
Well, to get back to the Trading Places analogy, all they had to do to forge the information, to create false information, was simply to write something down on a piece of paper,
right,
or forge the typing and just issue the report. And Bitcoin mining, it forces the transaction to go through this proof of work process where you have to invest time and energy to get the transaction into a block. You can't fake the time and the energy it took to put the transaction into the block to actually make it verified that Bruce paid me.
Right, and it's costly. But once you have put that into the block at that pretty heavy cost to you, other people can very cheaply verify it. And they can say, okay, they found that block and they went through that proof of work and it meets all the consensus rules because I'm running a node and I'm checking it. So I'm not going to screw with it. I'm not going to try to do something, different, because it would be too costly for me to build my own chain. I'm just going to build on top of that one. I mean, does that make sense?
Yeah, the whole 51% attack, I didn't want to get into it
Yeah,
for this
I don't
meeting.
get into that either.
And nodes, yeah.
But it's this whole concept of it's a decentralized system. It's completely trustless. You're writing a set of transactions, and you're saying that we know that in these transactions there's no double spent money. Everything meets consensus. Everything is like it's supposed to be, and we did this work using all this electricity and this energy, and we won this game for this particular block. So that means we're going to put it in there, and yeah, we spent a certain amount of energy on it, but as you'll explain later, we get the reward. And because we've spent that energy and that block is now at the top of the blockchain, everybody else can point their nodes to it and they say, okay, yeah, it's fine, it works, you do what you needed to do. And yeah, I mean, you're not looking for someone on high to go down and say, yeah, we can verify that, everybody can verify it. And the proof of work is critical to being able to do that. Now, I know I didn't explain it well, but if it weren't for that, Bitcoin just would not work at all.
Yeah. So there is a actual calculation going on that who determines what problem to solve.
Well, he's gonna get into that.
We'll get to that.
Okay.
Yeah, he'll get into that, but I just wanted to make sure you understood that expending energy and effort to write a block and then the nodes being able to easily verify it is critical to the integrity
they're just
of
generating a huge cost that nobody else wants to take on.
Right.
So, I spent the most money, here's what I got.
Yeah.
Yeah, it's money, it's time, it's energy.
Right.
It's what provides the security behind it. So at a high level, what is Bitcoin mining? And first of all, I just want to talk about the word mining itself, and because we're not actually digging in the ground for anything of value, but we use the mining metaphor, which is easily understood in human history, where we mine for gold, we mine for...
Who came up with mining as a metaphor?
That's a good question.
Gold and silver.
Was it in the original white paper or no?
I don't think mining is actually mentioned.
No.
I don't think it's actually mentioned as a mining. But it's a good metaphor because it's similar, because just like in order to find gold or silver or diamonds or anything valuable, you have to expend time and energy, labor. You got to be actually out there hacking away, right? Digging or panning for gold in a creek, right? Somewhere. It takes time and energy to find precious gemstones, digging, in a mountain. So we're digging also, but we're not digging in anything physical. We're digging in the digital realm. So an example of a miner is something that we've got a couple on the table here. We plug these machines in. They consume energy, and the machine is mining for a number. That's all it's doing. It's not solving anything of a practical nature outside of the Bitcoin ecosystem, outside of the Bitcoin world. It's really just looking for a random number. That's all it's doing. It's a very, very large number, so it makes it difficult to find the number.
When you say large, how big is it?
We're going to get to that.
Okay.
We're going to get to that.
And it has certain,
Come on.
there's certain rules that it must adhere to in
Yeah.
order for it to be a valid number.
Gotcha.
Yeah, and there's a process for that, and it changes also. How big the number is, it changes every roughly 2 weeks. We'll get to that. So anyway, if you own one of these Bitcoin miners that has been looking for the number and it finds the number, you basically get rewarded with new Bitcoin that are created, and this happens every 10 minutes, because the machine that finds the number is then allowed to create a new block, which is added to the time chain of blocks and transactions. And that's the reward. That's the incentive for spending all of this time and resources looking for a random number. You get Bitcoin. That's really how the whole thing works. That's the incentives. You ask the best. You get to ask the best questions. Like you're like right on it. How many? How much does it cost? How many Bitcoin?
Why would you do that?
Yeah, why would you do that? We're currently at 3 1/8 Bitcoin right now in this epic. We call it the epic, and we'll get to
We
why.
started out.
We started out
Show
at-
that, right?
We're going to show
Yeah.
it. Yeah, I'm going to get to that.
So when it halves, it'll go to 1.65.
It'll go to 1.5125 or something like that. 1.5
So
basically.
when they halve, so you get half the reward.
Yeah, exactly. So just to review again, and why this is relevant to mining, is that Bitcoin is this global ledger. The ledger of all the transactions between us is stored on many computers around the world. So we call this a decentralized database because the database is contained on many computers, on all of our computers around the world. New transactions are put in blocks every 2 minutes, and the miners are incentivized to find this random number. And by the fact that blocks are added on top of each other, you can't go back and change what's in a block. So these transactions are final. There's no going back. There's no customer service to say, oops, I accidentally sent Bitcoin to Jim when I wanted to send it to Donna. There's no going back. So these are final. And cryptography, which is the science and mathematics of keeping things hidden, is what secures the whole thing and prevents Bruce from spending his Bitcoin twice, like sending one Bitcoin to me and trying to send the same Bitcoin to Amy. This whole thing is secured in that way. And that's also how we secure our traditional banking and financial system, same way. So getting deeper into these things called blocks and the proof of work. So a miner finds a block, and the random number is based on the previous hash, when the previous hash from the previous block. And this hash is, again, a number that was found by a miner. And then using all the data from the previous transactions in the block, plus the winning hash, creates a new puzzle for a random number. And then when a miner finds the new answer to this random number question, it gets added to the end of the block and becomes the next previous hash for a new block that everyone starts looking for. We start looking for the new block, and then it happens again and again. We combine all the previous transactions, which are basically unique, thousands of transactions with their own public keys, their own public hashes. And then from all of those, with the previous hash, we get then a new unique puzzle. And then the winner gets to be at the end of that block, and we go on and on and on every 10 minutes. And this, by doing the work to find the random number, we call this process proof of work. We can't fake it. And anyone can verify that this random number solves this cryptographic algorithmic problem.
So this is all based on public key, private key encryption, okay.
Yeah. And I can't explain to you public-private key cryptography very well. And if anybody knows anyone who can, I would love to have them here, but I'm giving you just a very high level of my understanding of how this all works. So proof of work is really fundamental to Bitcoin, how it secures the value of Bitcoin, and why we can't forge Bitcoin, and what keeps everything very secure. So again, electricity goes into these machines. These machines produce hashes. Hashes are just another way of saying a guess. A guess, a guess, a guess, a guess. Does this number work? No. Okay, we guess again. Does this number work? No, we guess again. And these machines do it trillions of times a second.
So there's no problem being solved. They're just guessing at a random number.
Yes, and the media has done a very poor job, surprise, surprise, on reporting on actually what's going on in the Bitcoin network. It's not solving any kind of a useful problem. It's a random number.
Why doesn't it solve? Why didn't they set it up to solve a useful problem? We think all this energy they're using, why not do that,
Good question. I don't know. Anybody? I don't know.
I would think it's just not
Secure enough.
Probably not practical. And who's going to come up with the problems?
Yeah. Then who will come up with the problems? And then you have a central authority determining what the problem is, and then the whole system breaks down.
It's fairly,
Yep.
I don't understand it exactly either, but it's fairly simple in the sense that it combines these various numbers, and then it says, I need you to find a number that's somewhere in this range, but it's less than this number or whatever, but it's got to be, it has to be long enough and have these, because this little guy that I have plugged in, a lot of times most of the time it comes up with a hash that's like 4 digits long, and it needs to come up with one that's like at least
18 digits.
18 digits long, and it
Yeah.
just can't do it because it doesn't have that much power. But once in a while, I mean, it will come up with it. It's just probabilities. It's all
Right,
probabilities.
right. It's
You
just
know?
These machines are just random number generators is all they
Yeah,
are.
they're just randomly
That's all it
generating
Speed
numbers.
is all it is, yeah.
It's all about just computing
And,
speed,
and
yeah.
they need to generate one that matches certain parameters that have been defined by the
Right.
whatever.
So here we have an example of a hashing function. At the bottom left, it says stay humble and stack sats. So that's the original piece of data. Then we run a hash to see if that number run through the algorithm then creates this other number that we need to find. And it's just this guessing of what number will create this other number on the right side, 6689. What number is going to do that according to this algorithm? What number is it going to be? And due to cryptography, it's very hard. You can't figure it out going backwards. You have to just randomly
You just have
guess.
to roll the dice over and over
Yeah,
again.
that's all it is. And so what you start to understand is that Bitcoin it's founded on the first law of thermodynamics. Energy cannot be created or destroyed. So when we run these miners, which are very energy intensive, and they take time, we are putting energy, literally putting energy into the backing of Bitcoin. And it's an important concept. You're just yawning.
Sorry, no.
Okay, so this random number is called a nonce. It's the initial random number, and it just produces the number of digits that we need and that we hash for. So we have this piece of data that comes from the previous block plus the nonce, which is the random number, combined with a hash produced by the machine produces the new output. Okay? And if we do this enough times, and we do this enough times, we eventually find the winning number. And the machine that finds the winning number has the right to create a new block with all of the transactions that we in the Bitcoin network, we want to send Bitcoin to each other. So these transactions get put into a new block and get added to the blockchain or the time chain, and it's there in perpetuity. It's there forever. And then the miner gets rewarded new Bitcoin, which is currently at 3 1/8, plus the transaction fees. So for me to send Bitcoin to Terry, I have to incentivize the miner with a little fee. And currently they're pretty small, but this amount of the fee, it varies over time. And this slide, by the way, is a little bit dated. This weekend we'll actually get to 95% of all Bitcoins, and we'll be at about 19.8 million Bitcoin have been created.
So who's paying the 3 1/8? Where's that money coming from?
Poof, it's just created.
Just created.
It's just created. It's created by the process.
Well, you mean the new Bitcoin that gets
Yeah.
issued? I mean, when Satoshi Nakamoto set up the software, he set it up such that those 21 million Bitcoin existed, but they were time locked.
True.
And so when the new block is mined, they're basically released.
Opening, I guess.
Yeah.
That's a good point. Yeah.
Um,
They were theoretically created, but they weren't available to anybody.
Right.
Yeah.
Man, the fees are all over the place.
They are all over the place, and a lot of this has to do with use of the network and also spamming on the network, which we might get to in a future meeting about spam on the network. But it varies quite a bit, and right now, fees are extremely low, very, 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 very low, low as they possibly can go actually right now.
Just
But
because of competition.
just because there isn't very much demand for block space.
Yeah.
There's not a lot of transactions. You can do about 4,000 transactions in every block, so every 10
So
minutes.
everybody's sitting on their money.
So exactly. People are not using it to buy coffee. They're sitting on it because they see how much Bitcoin is going up. So why would you?
That's always been true, though.
Hasn't always been true. Exactly. There are these periods where people are using the block space, sometimes for things that are not related to money. People are putting like images and putting non-monetary data on the block in the blocks. So that's another issue. So this is the block subsidy is the reward. That's what it's called. It's the predetermined amount. So originally we started with 50 Bitcoin. It got halved in 2012 to 25 Bitcoin. It got halved in 2016 to 12.5 Bitcoin. 2020, 6.25, and then a year and a half ago, we got cut down to 3.125. And so that's why I called it an epic. We call every one of these halving epics sort of what we call it. This is the schedule that we have. So right now we are in epic 5, where it's 3.125 Bitcoin. And then in April 2028 is the schedule for the next halving, and we'll be down to 1.5625, which is the exact number, roughly 1.5 Bitcoin, okay? And this is gonna go on until the year at least 2020, or 2120. And you can see these are all of the halvings that are scheduled for the next 100, for the next 100 years. And, we won't be around for more than half of these halvings. We'll be long gone, from this earth. But Bitcoin is designed to go for quite a long time. And you can see why this is the basic explanation for why Bitcoin is getting more valuable, because less and less is getting created over time.
Well, it's also designed to persist beyond when there's no more subsidy.
Yeah.
Right, yeah.
Right.
At some point in 21, 22, 23, hopefully, people are using it, the block space is filled, it's more expensive, and the transaction fees will be incentive for people to
Right.
mine.
It's a guess as to when transaction fees will overtake the block subsidy, the reward.
Yeah,
So, but that's the theory of the network design.
right.
One day, say maybe in 2050, transaction fees will be worth more than the block subsidy.
You don't have a chart that shows how much one Bitcoin was worth at each of the halving points, do you?
Not in this deck.
Yeah.
Yeah.
It has obviously gone up. So.
Yeah, it has.
From a data point of view, when you're mining on that or that, is everybody looking at the same clump of data?
Well, they're looking at the previous block, which is immutable, which is unchangeable, and that's how they get to figure out what is were they hashing for.
How many bytes is that block size?
It depends. It depends.
If it fits on that, it must not be too big.
Well,
Or does that use the?
this is the miner. Miners don't actually store previous blocks. Miners are just looking for the next block. We're going to cover nodes in a future topic, which is storing all of the previous transactions in the history of Bitcoin.
Okay.
But
So
simply,
that's a pretty big.
Yeah.
we're at like 800 gigabytes right now.
Oh, okay.
That's where we are right now. And every block is between 1 and 4 megabytes, basically. So
Oh.
every 10 minutes, 1 to 4 megabytes. So blocks are just added on top of each other, and the further you go down in the chain, the further deeper you get, the more solid it becomes. So sometimes when you're doing transactions, you'll see how many confirmations there are for your transaction. Like sometimes you see that. That confirmation, each confirmation is how many blocks in the past did this transaction happen. So that's what a confirmation means, is that if you see it has 3 confirmations, that means this transaction happened 3 blocks ago. That's really what they're calling a confirmation. Okay. So here's a visual example of a block. And all of the blocks are publicly visible. And you can go to things called block explorers. Block explorers are simply web interfaces to the entire blockchain. And you can look at the contents of any block in the history of Bitcoin. And this is an example of one block. So this is block number 920,445.
And how many blocks are there total?
I would have to look at my node, but it's 900,000 something. I forget.
Oh, okay.
It's not a million yet.
It's not a million yet, but we're in the 900,000s. I think 940,000, if my memory serves, something like that. And we can look at it. And here's the hash. Here's the timestamp, the size of the block, 1.52 megabytes. The fees that were paid, the total fees, and the block subsidy altogether, and who it was mined by, Foundry. So a block. This block had how many transactions? Does it say? It doesn't say. But anyway, a block has about 4,000 transactions, and so this shows you kind of what the possibilities are for transactions it doesn't quite match the credit card companies, but it wasn't designed to match credit card transaction throughput and possibilities. So we get basically 10-minute intervals in between the blocks. And Satoshi talked about this in his dialogue with people after he published the white paper and after Bitcoin was launched. And the 10-minute interval roughly was established because it gives miners enough time to create a new block, but it's not too short where people would be stepping on each other's toes. So he felt like that would be roughly a good number to do this. And how do we keep this 10-minute interval from happening? We have a difficulty adjustment. So if more people are buying miners and turning them on, more hashes are being produced, so we find blocks faster. And the opposite happens if more people turn off their machines and less hashes are being put into the system, we find blocks at a slower pace. So Satoshi created this thing called a difficulty adjustment.
Let me just go back to the
Sure.
to the 10-minute thing. So I think you said this, but just to reiterate, this is by design. A lot of people say Bitcoin is slow. But again, remember, this is a completely new type of protocol. We're trying to do transactions without any trusted third party. So if you would allow these miners to discover blocks very rapidly, the problem could be that you would have different versions of the chain happening before everybody gets a chance to verify. And if you have different versions of the chain happening, then you have, like, maybe I sent a transaction 20 minutes ago or something. Now suddenly my transaction is on this orphan block because everybody else found a block and they're building on it, and I want mine to be like settled before somebody puts a new one on top of it. So the fact that it's purposely slowed down is to ensure that everybody has time to verify. And I mean, a lot of people complain about it, that it's slow, but again, it's final settlement without any central authority, all just decentralized. And if you want faster methods to settle stuff, then we can go talk about layer 2, which we'll do at a different time.
Right.
But
so there's trade-offs between speed and security.
yeah, and that's the fact that you can do this means you could potentially even like mine from the moon or from Mars, Bitcoin. He was thinking ahead.
We don't have our Space Coast representatives here tonight.
Yeah.
Yeah, that's a good point, Amy. Thanks. So here's an example of a hash. You can see it's a very long number, and it's not just base 10. It's base 36. So every digit can either be a number or a letter. So we get 36 possibilities for each digit. Okay. So this turns out to be a very large base 10 number. A number that I can't even describe. It's like 10 to the 32nd or something like that. It's a very, very large number you're looking for. But this difficulty adjustment that Amy so nicely explained, some people say that this is actually a unique invention by Satoshi. Like nowhere else in computer science has ever something like this been done before. And some people say that this is actually the most genius thing that Satoshi created was the difficulty adjustment. Because of course, if you wanted to go get yourself some Bitcoin and there was no difficulty adjustment, well, I'll just spend $1 billion on miners and I'll turn them all at once and I'll beat everybody, right? And I'll continually be able to do this. But the difficulty adjustment allows the network to adjust for a sudden influx of new mining happening, of new hashing happening, by still keeping everything fair at roughly a 10-minute level. Right. So that's why we can have more and more money, basically an infinite amount of money and almost an infinite amount of energy go into the Bitcoin network, and it's not going to change how hard it is to create new Bitcoin. Nothing's going to change because of the difficulty adjustment. And that's an algorithm in itself. It adjusts. And this happens exactly every 2016 blocks, which is roughly every 2 weeks. Roughly every 2 weeks, we get a difficulty adjustment in the network.
And if a bunch of hashing power drops off the network, like, I don't know, 5 years ago or something, China said no more Bitcoin mining.
Yeah, we see this here in the middle of summer of 2021.
Then the difficulty adjustment goes down, so you can still try to keep up that 10-minute.
Right, exactly. So the network
Nice.
adjusted when China banned Bitcoin mining, and all the miners had to turn off their machines and move to other locations. And a lot of them went to Kazakhstan next door. They went to Russia. They came.
Didn't take them very long.
Didn't take them. It took them a few months, actually. It took them a few months. So what the network adjusted? The difficulty went down because all these hashers left the system. So in order to keep a steady 10-minute heartbeat of the network, the difficulty to find new blocks had to go down. But of course, since then, difficulties has gone up and up and up and up as people like me started to mine Bitcoin.
Spending all the money on them now.
A lot of different people are spending a lot of, and I have a slide on that actually, on public companies, in fact. A lot of public companies are getting into it.
What countries are doing the most?
I got a slide on that too. Good question.
Unfortunately, mining is more centralized than ever, but we'll get to that too.
I'm sure it is.
Who makes the hardware, the chips, the ASICs?
Chinese.
That's why I have a slide for that too.
Okay.
He's the answer man.
I knew you were gonna say that.
So this was a nice quote from my mentor, Andreas Antonopoulos. Bitcoin is robust, historical immutability by thermodynamic law. I think that is just brilliant. We only need one proof of work ledger. That's all we need to manage all the money in the world is this system. But just to summarize everything I've thrown a lot of ideas at you. This simple infographic explains it. Okay, you need to find one random number between 1 and 10 to the 22. If you guess it, you get 3 1/8 Bitcoin. Miners say, okay, let's go. And that's how it works. You're just looking for a random number. If you win the number, you win the Bitcoin. And that's how we get our transactions. That's how we send Bitcoin to each other, is through this work that miners do. And they're incentivized. So Bitcoin miners are a very, very important part of the network. They make everything run, but they don't control the network, but they provide a very, very valuable service for us to transact together. So the question was, Jim asked, with this S9 on the table here, they said, is that using a GPU? Well, in the early days of Bitcoin, Satoshi wanted you to be able to mine Bitcoin on your laptop or your desktop. So you could actually mine Bitcoin for about the first 18 months with a general computer, a CPU, a centralized processing unit. CPUs were the early ways. And then people figured out, how do I generate more hash power? I need a more powerful computer. So graphical computer cards, for video games and now for AI, they just stack more and more chips in there for specific applications. They started to use these gaming machines for mining. That lasted for about another year. And then someone's figured out, actually, if we really want to get the most amount of hashes, we have to have dedicated computers called application-specific integrated circuits, or ASICs. And these are machines that do one thing and one thing only. You can't send email on them. You can't web browse on them. You can't play checkers or chess on them. They do one thing and they do one thing only, and they run the Bitcoin algorithm, and that's all they do. Okay.
They just hash.
They hash away. They do nothing else except run the simple hashing algorithm, SHA, 256-bit algorithm to find these new blocks. So, what's the top of the line machine do right now? It does 580 terahashes a second. That's 580 trillion guesses per second for one machine. Now, the machine costs, I think, $30,000, but there are thousands of these machines. There's hundreds of thousands of these machines out in the world hashing, not all at 580 terahash, but the big S9 that I have on the table here is at 14 terahash, and Amy's little axe miner there is at 1 terahash. Little cute guy, 1 terahash.
Stand a chance, buddy.
Okay.
You might guess the right number though.
It's happened before.
We just need 1 trillion of them.
Yeah, 1 trillion of them, exactly. So the Bitcoin network, it passed 1 exahash about 2 months ago, I think. We passed the 1 exahash number, the whole network, and that's one with 18 zeros after it per second. That's the number of guesses per second. The network is.
So is there anything that stops them from guessing similar numbers to other, or it's just a random thing?
It's just a random thing. Yeah.
So they could all guess the same number theoretically
They
at the
could all
same time.
crack the code at the same time too, when that happens.
Then they share it.
Well, that's,
Whoever gets there first.
Whoever gets there first and claims it, and then the nodes have to verify it. So whoever gets quickly out to the network of nodes verifying this hash work wins the block subsidy first.
whoever,
Yeah.
it's just basically, it's the longest chain always wins.
Right.
Whatever builds up, gets built on top of it. So if two people, find it at the same time and they happen to both build on it, and then somebody else's gets built on before somebody else's gets built on, then that one's probably gonna be the one that ends up getting. That's why you don't get the reward right away. You have to wait a few blocks before you can
The Coinbase reward.
get the Coinbase reward.
Yeah.
Like 3 blocks or something.
Yeah, there's esoteric cases where this does happen, and
Well, I think it happens frequently.
does it?
I think so.
It's
I mean,
up-
not infrequently.
Yeah. And the miners always say that's why we have to have fast internet connection to get our work out there as
Yeah.
soon as possible, because whoever gets it out there the first wins, and they're talking like millisecond
Mhm.
types of
Or
delays.
just have all the nodes right next to you. What are they doing?
The nodes are all around the world, though.
Those are, yeah.
Yeah,
Well, you just need 51% of them next to you, right?
not 51%, but you need to propagate the fastest.
Yeah.
Go around the network anyway. So these are a couple of other examples of what miners look like. So the top of the line is on the left here, 580 terahashes. It consumes 5,510 watts versus this one on the right, which I actually have running in my garage right now. It's a beautiful little space heater, which is why I plugged it in yesterday. It's a wonderful little space heater.
Is it this size?
It's
Oh,
in between
69.
these two sizes. Yeah, it's like a little space heater. It's a really nice little space heater. John has a couple of them. He didn't show up tonight, but he runs them and he likes them. And this Nano S3, it costs like $350, 6 terahash, 140 watts. It's basically a space heater gives you some Bitcoin at the same time. It's really nice. So can I do this myself? Absolutely. That's what these machines can do. The picture on the left is actually an S9 that I have on the table here. And this person has it hooked into, looks like a 220 volt plug, and has the heat vented out there in the silver tube.
It's
And
like a dryer vent,
that's exactly what it is. That's exactly what it is. It is, yeah.
so you don't have to air condition it.
Yeah, exactly. Because these things produce a lot of heat. They produce a lot of heat because they're doing a lot of work. Right? Or if you really want to get sophisticated, you can buy shipping containers on the right. And you can fill these shipping containers with racks and racks and racks in the machines if you want
And
to start.
store them underwater.
How much
Isn't
does
that
it
what
cost
some
you one
countries
for
are
your
doing
little-
for cooling?
That little one.
That?
No, not that, that
The other one?
That one.
That's like $350, I think.
To run it?
Oh, just to buy it. To buy it. To run it, it's 140 watts.
Yes.
So 140 140 watt hours. So that's 0.14 kilowatt hours.
How much is that for electricity? Is that
Maybe-
electricity, right?
$10 a day or something?
Yeah,
Like $1 a day.
It's like
oh, then, okay.
$2
$2.
kilowatts a
No,
day.
okay.
So,
Yeah.
So 2 times. No, it's less than that.
Less than that. So it's like 30 cents a day.
Yeah, a little more
Yeah.
than that probably.
Yeah.
Oh,
Something like
and
that.
How much would one of those run it?
So a 100-watt light bulb, that's what that is.
Yeah.
What about that one?
5,000.
5.5 megawatt or
Yeah.
megawatt.
Kilowatts. 5.5 kilowatts.
Kilowatts, yeah.
So
Remember,
hold
you're
on.
renting.
Yeah, if you're landlord, it pays the utilities for you.
No, they don't pay my utilities.
Well,
Oh.
Isn't this smart?
I know people who actually travel a lot for Bitcoin, and they take miners with them and they plug them into hotels,
Yeah.
hotel
Oh,
rooms,
that's a great idea, huh?
and also students at college dorms. I know my son.
So that big one costs you $1 an hour to run.
Okay.
$1 an hour?
But you can't plug that into a regular outlet. You need a 220, if not more. 5,000, 5,000 watts is a
Yeah.
lot.
That's
But
20.
that's the biggest one you have is the,
I don't have one of these, but this is the top of the line machine right now.
Yeah, but it also gives you heat back. So if you're up north, you can
well,
run
if
a
you're up north,
greenhouse.
yeah, but
Yeah.
unfortunately.
Well, you
Alright.
can get what's called an absorption cooler, and you can put the heat and it'll make air conditioning. So it's pretty common
Oh,
thing.
I think it's more electricity.
That's
Well,
pretty much like
all you need to
clothes
do is-
dryer.
It does, but you're making it heat, which is what powers it, so.
Yeah.
For your
Sorts of
home
options.
air conditioning.
So you're thinking, well, but if I only have one of these little machines, I'll never win the block subsidy reward, right? It'll never happen for me. Well, you're right. It probably won't happen for you. So what do people do? People created things called pools, which are ways just for everyone to pool our hash power together. And then when the pool itself finds a block, we then distribute the reward, the block subsidy and all the fees equally or proportionately to all the
Based on
people
hours.
contributing. Depending on how much hash you put into the pool, you get satoshis, you get small percentage of Bitcoin back.
Do you think they're honest?
Yeah, you'd have to have some.
Yeah, I think you can see it.
Yeah. That's a good question. You do have
You
to.
see what you're doing, you don't see what each individual's doing.
You
necessarily.
don't, but as long as you get sats back. And so I'm showing you on this slide, this is my mining pool dashboard for my miners. And I just pulled this up, you can see today. I pulled this data up. So the top line is my total. And over 3 hours, the average was for 3 hours was 286 terahash per second was my average production time.
For 3 hours.
Average over 3 hours
Yeah.
per second. And then the next line is my miner that is hosted actually in Iowa. It produced almost 200 terahash a second on average. The next line is my Avalon Q, which I have in my home, produced about 81 and 3/4 terahash. The next line is my Avalon 3, which was the picture on that slide, which is in my garage right now, producing about 3 terahash. And then the last line is my Brains mini miner, which I have on my desk. And it gives me all sorts of information besides running a miner. It gives me information about difficulty adjustment, block height, price, and all sorts of other things. It's a really nice little thing to have in your home, and it's quiet, and I love it. It doesn't produce much hash, but it produces a lot of data for me that I refer to a lot.
572 terahashes per second is what you're doing.
I'm doing about, well, at this snapshot, it was
All those.
286 terahash is the total.
Oh, it's a total, I was, okay.
Yeah, I know. It should be at the bottom, but their interface doesn't calculate it that way.
286 and you earn 0.006.
That's your total earnings ever?
I think that's my total earnings so far. Yeah.
For that many terahashes?
No, it's not directly calculated. No, it's not. The only thing that's close to accurate, I think, is the Avalon 3 Nano is probably accurate for a 3 hour period. I earned 11 sats. That sounds about accurate. So anyway, so pools are how we can get rewarded without actually solving the hash algorithm problem and getting the full block subsidy. We can get proportionate. And there are a lot of these pools around the world. But one of the problems the Bitcoin network currently faces is mining pool centralization. As you can see, there's about 5 pools in the world that control about 80% of all the hash power in the network. Okay? And so what if these pools decided to be nefarious actors? What if they just wanted to do something to mess things up? So Ant Pool is in China. F2 Pool is in China. I don't remember where Via BTC is. Foundry USA is obviously in America. And Spider Pool, I believe, is in the United States. And then the rest of the miners are small. So mining centralization is a problem. I mine with Ocean, which is on this chart at 1.59%. And Ocean was created to fight this problem of mining pool centralization and something else known as block template centralization, which is another problem which we won't get into. So I mine with the Ocean Pool, and they also actually have some of the lowest fees because all of these companies, they're not just doing it out of the goodness of their heart, they get 1% of all of your earnings, and that's their business. They provide this service for you.
Who owns Foundry?
What's that?
Who owns Foundry?
I don't know. I believe it's a private company. All these are private companies, though.
Yeah.
Oh, actually, Mara Pool is run by Marathon Digital, which is a public company.
And Antpool has to be
It's Bitmain.
Bitmain.
Yeah, the Chinese company. Yeah, that makes this S9. Yeah. So that's a challenge. And then you wanted to know what countries are doing the mining. Well, here's this chart. It's kind of hard to get a real knowledge of this because, well, it's just hard to get exact figures due to the way the internet is, distributes data and the way data is routed. But it's estimated that the United States has the majority of the hash rate, then Russia and China. Those are the three big players. And then all the other countries are smaller little players. And they generally are showing up here because they have a very large untapped energy source. So Paraguay, for instance, you may know, has a very large hydroelectric generation capacity, which they can't use. So Paraguay is, I believe it's landlocked, and they generate a lot of electricity, but they can't get it anywhere. You can't send it to Europe. Electricity, you have to use it now. That's one of the problems with electricity generation. You can't store it. It's not like a barrel of oil where you can move it around the planet and then burn it. So Paraguay has this huge problem. Well, they've invested into getting Bitcoin miners to come down there so they can buy their wasted hydroelectric electricity. Ethiopia is another example. They have built a giant dam there. They have the same problem. They're generating a ton of electricity and they can't sell it. They can't use it or sell it. Canada also has a lot of hydroelectricity in Quebec. And I don't know about Oman and UAE, but I imagine they're actually burning oil for their electricity.
They need the heat too.
Yeah, like they need a hole in the head. And then another problem that we have in the mining world is centralization of the mining chips, the ASIC chips. They're almost all made by a Chinese company called Bitmain, which is the S9 on the table here, and is the top of the line machine that runs at 580 terahash, is made by Bitmain, and they're a Chinese company. So there are also initiatives around to diversify the mining manufacturing. Canaan is a small company, I believe they're based in Singapore, and the little one that you like, Donna, that's a Canaan miner. Made in Singapore, and the Avalon Q that I just bought, that's cranking out 80 terahash in my house. That's also a Canaan miner. So I'm trying to diversify miners also.
Why isn't TSMC making them? Taiwan. Semiconductor.
I think they're at full capacity for Intel and Apple and
for others.
Yeah,
Motorola.
what they're doing.
Yeah, they're totally slammed. I think. I don't think they, they don't want to get into this business. They're doing fine. So Bitcoin mining has attracted a lot of venture capital, a lot of entrepreneurs who think they can make money by investing capital into these machines and into these locations, into warehouses around the world. And this is a list of the top publicly traded mining companies in the world. And Marathon, which I just mentioned, is an American company, and they're the top, but there are a lot of others around the world. Iron, I know, is based in Australia, yep. And there are these others. Most of them are American, and there's got to be hundreds of public companies now around the world who are taking investor money and they're buying hashes. That's what basically they're buying hashes, and so they can earn Bitcoin. And it's a whole industry now. It's not just some little cottage industry with some nerds in their basement running these little machines anymore. It's big business now. It's big business. Okay, well, anyone wonder if they should mine Bitcoin? Yeah. So why should we mine Bitcoin? Well, if we mine Bitcoin ourselves, we're not then at the mercy of some big company. We're not at the mercy of a big country. We're not at the mercy of some dictator. We are participating in the Bitcoin network, not just by holding Bitcoin, but by mining it ourselves. And we decentralize and we spread the risk out, and we make the network, and we make our Bitcoin more valuable. If we already hold Bitcoin, we become a miner, we make the network stronger. On a more selfish reason, there's a strong possibility that when you mine Bitcoin, you actually buy Bitcoin at a discount. And this really depends on a lot of variables, which I'll get into. But most people mine Bitcoin because they want Bitcoin. They're willing to pay for the machines. They're willing to pay for the electricity because they want to get Bitcoin from it. And if you know about the concept of dollar cost averaging, which is, okay, I'm going to buy $10 a day of Bitcoin, or I'm going to buy $100 a week of Bitcoin, this is another way to do it. Because you get Bitcoin you're mining every second of every day that your machine is plugged in and is generating hashes. You're getting Satoshis, maybe not a lot with your little axe miner, Amy, but you're getting Bitcoin. Not only that, but you are getting Bitcoin that is KYC free. KYC meaning know your customer. Your name is not attached to it, your driver's license, your passport, your address, your phone number, your email address, your fingerprint, and your face, and all that other stuff. Because if you've ever bought Bitcoin in an exchange, they are required by governments now to collect all that information. So a lot of people will mine Bitcoin because they want KYC free Bitcoin. They want to be off the grid. When you receive this Bitcoin from a miner, some miners will not ask you for any information. The only thing they want is a Bitcoin address from you. That's all they want. And then they will send it to your address. That's it as anonymous Bitcoin as it gets right there. Yeah.
And is that illegal if you don't report it?
It's only illegal if you receive it, sell it, and don't report it. Then you're violating, IRS income
Okay.
reporting.
So you can.
But you can hold it as long as you want. There's no crime in holding it.
Well, it's only illegal if you don't report your capital gains on it, right? Because
Sell it.
the government now says, hey, because we're debasing the currency, anytime you have an investment that makes money for you, you have to pay us.
We want our cut.
But if you lose money on it, and you don't report it on your taxes, I mean, that's not illegal.
Yeah.
That would be probably stupid not to report it on your, no, I guess you're not gonna be able to recoup your loss, are you? Well,
That's a tax
that's
issue.
a tax issue.
Yeah.
But just having it and selling it is, in and of itself, is not like
Not
a
illegal.
legal
Not illegal.
requirement, no.
They just want their taxes. That's what they
I
want.
mean, I think there at one point in time, there probably was, and there probably still is legislation that will say, we don't want anybody to own any digital assets that are supposedly money, and we don't want you to custody your own. I mean, they've tried to do that, but in the United States of America, you can still own digital assets, you can still trade digital assets.
Yeah, and we'll get to that issue of, is there governmental risk?
Yeah.
But there's also another reason is that when you start to mine Bitcoin, you become a larger voice in the discussion about the policies that run Bitcoin. And this is particularly an issue these days where there is a contentious issue in the Bitcoin community about spam in the mempool and in the blocks themselves. So you become a more active participant in the Bitcoin network itself and how it will work in the future. So you can either have these machines in your house, or you can pay someone else to house these machines somewhere in a far off location. They worry about, the 220 volt, electrical connection. They worry about the proper amperage. They worry about the proper ventilation. They do it all for you, and then you just pay them to do it, and you put your machine with them. That's hosted Bitcoin mining. And it's a way most investors do it.
Is that how yours got to Iowa?
Yeah, exactly. I never saw my machine, actually. I simply paid the company about $5,000
Okay.
and bought it from the company. And the company says, yeah, it's already in a rack, in a warehouse, connected to a hydro and wind electric, cheap electricity facility in Iowa that I only pay 7.5 cents a kilowatt hour for the electricity. They bill me every month. It's about $200 per machine to run the machine. And then I get Bitcoin from it. And that's all I do is I just send the money every month. And then all of my hash power goes to my pool. My pool sends me the Bitcoin.
So
And
which
of course,
is,
you have a statement and everything, and identifying what you've gained and what they've shared with you.
And
Just
so
like-
how have you done so far?
I haven't actually done the math yet. I've been doing this hosted mining since July. I had done a lot of home mining. I'm like, okay, I'm ready to take the next step up. So I will start to do the accounting at the end of this tax year, because I'll have to calculate. And also there's a great thing is that from the One Big Beautiful Bill legislation that passed, we as Bitcoin miners now get to take 100% depreciation this year for any Bitcoin miner that we buy, which is a tremendous tax advantage if you know anything about depreciation rules for other capital investments, real estate, and things like that.
So on that $5,000, you get to depreciate that.
This year,
Wow.
exactly.
So how do you think you're doing? You obviously run the numbers in your head. Don't tell me you don't.
Well, to me, if I break even, I'm happy because I am supporting the network, I'm decentralizing the network, I'm becoming a more powerful Bitcoiner, and I'm getting KYC-free Bitcoin. What is the value of KYC-free Bitcoin? It's whatever you value it. To me, that's a valuable thing. And so when I get my KYC-free Bitcoin, I keep it separate from my other Bitcoin because I want to know that in my mind, this is special Bitcoin. Not that it's really needed today. It's really not needed. And I have no intention of evading taxes, if anyone's listening. I have no intention of that. But you never know in the future if you're ever going to need KYC-free Bitcoin. You don't know the future. You don't know the governance. You don't know what jurisdiction you'll be in and what laws they might pass.
Oh, but if you're going to depreciate this, you have to have income against that you're depreciating it against.
Yes.
So you have to be claiming that Bitcoin as an asset.
True, but Bitcoin is fungible. So I can be selling Bitcoin that I bought 10 years ago today and claim that because that's income. I can claim that against my income because Bitcoin is Bitcoin. There's no way of telling, the Bitcoin that I earn today is any different from the Bitcoin I bought 10 years ago. There's no way that anyone can tell me it's
Well,
different.
why would you take the cheap Bitcoin and not the expensive Bitcoin and use that against your against what you're spending so you have no capital gain?
Well, that's the intention is to be like even. Exactly. That's the intention is to have no income. So you pay no taxes. That's the goal, right? So that's why we do tax planning. So that we try not to pay taxes, right? So we have to calculate.
Boomers hate paying taxes.
I think that's a boomer's best quality. Hate paying taxes. I'm kidding. So how much do miners earn? Well, it's a calculation based upon what is the Bitcoin price? What is the price of your electricity? What's the price of your machine? So here's some examples. Daily operating expenses versus daily revenue, and you get a net profit on the day. This does not include your initial capital outlay. This is just operating expenses, operating revenue, operating profit. Okay, just some examples.
What's an S21 hydro cost?
I don't have those
30
numbers.
grand.
But probably like 20 grand, my guess. But anyway, I have some calculations coming. They're coming. Okay. Is it profitable? Well, again, it depends upon these. It depends upon these variables. What are your pool fees? What's your maintenance fees? What's your initial capital expenditure? Price of Bitcoin? All of these stuff. There are a lot of variables involved here. So what are things that make it very profitable? Well, the price of Bitcoin is high, obviously. Your electricity costs are low. You have efficient machines. Your machines are properly maintained. You have high uptime. The opposite makes it less profitable. You got bad machines, you have bad maintenance, you have expensive electricity, and you got a crappy Bitcoin price. Those are all the things. And so these are all variables that are constantly changing. In my mind, when you're bullish Bitcoin, you become a miner because you believe in the future of Bitcoin. Yeah, this month or this year even, I may not make money on the Bitcoin that I'm earning. But if you really believe in the future price of Bitcoin, you want to do anything you can to get Bitcoin that makes sense, particularly if you can save on taxes, So, and this comes into what's your return on investment? What's the bottom line here, okay? And so in my experience, it's somewhere between a 2 and a 3 year ROI, all inclusive. So say I put $1 million in about 2 to 3 years, I'll get $1 million back, and then everything on top of that is profit. Okay. In terms of other industries, a 2 to 3 year ROI is pretty outstanding. If you've been in other businesses, like what's your ROI for a restaurant? Well, you're lucky if you survive 2 years in a restaurant, right? But say a construction business, 7 or 8 years. Real estate, 10 years. Manufacturing businesses can be like 4 or 5 years. Bitcoin mining, 2 to 3 years. And that's why you see all this venture capital, all this investor capital going into these public miners, because it's a pretty good business. And there's no reason why we can't do it as well. So here are some calculations that I did for a client this year about what is the ROI, and also considering the tax savings for this person, assuming a 22% tax bracket. So these are all the details, the different miners, the release date just says, when was this machine manufactured and released to the public, hash rate, watts, the efficiency, daily cost, daily revenue, daily profit, operating margin, yearly profit, then your purchase price subtracted by your tax savings and your depreciation, your real cost, years to break even. On this machine, we figured it was about 1 3/4. Assuming things go well, assuming a lot of things. Does Bitcoin stay at 120,000 when I did this calculate? Well, no, Bitcoin's gone down 20% in the last couple of months, right? Right. So, but hey, maybe next year Bitcoin has doubled. We don't know. What's going to happen to the difficulty rate? That's the other thing, is when you buy these machines, it takes a certain amount of energy to produce the sats. But in 2 years, you might get half of the amount of sats that you do today, because the difficulty adjustment has changed so much. Are your electricity costs going to stay the same? Is your company that you're mining with, are they going to demand more money from you to maintain their machines, or are they going to go out of business? And are you going to then become a creditor in a bankruptcy? I mean, you have all these variables. What tax bracket are you in? What country are you in?
So why didn't they go with the 521 plus?
There was some concern about the technology, hydro technology. Hydro is machines that are water cooled.
Right.
And they had concerns about hydro, long-term maintenance issues of hydro machines. This is a relatively new invention in the industry. So they're more expensive, but they generate the most power because they can dissipate the most heat. And theoretically, they should be better, but we have no proven track record for,
No, I mean, I'm talking about that 520, the fourth one down, which has a 1.66 break even.
Those weren't available actually.
Oh.
They actually were not available because they were so popular.
Yeah.
We couldn't get them, so we went with the middle one. And
So for these shared ones, you actually have to buy the machine yourself and ship it to them, or
the hosted mining,
yeah.
no, you don't have to buy it and have it shipped. They actually have the machines on site, and they say, "Here's our inventory.
Right.
What do you want to buy?"
Right.
So in this case, from Simple Mining, they didn't have the inventory of the bottom 3 or the bottom 2 because people could see they're the most efficient.
Mm-hmm.
But just because you're the most efficient doesn't make you the most profitable, because the useful lifespan of these machines can be shorter even though they're more efficient. So just for the very reason why this machine is sitting on this table here is because it costs more money to plug it into the electrical grid than to run it. So the life of this machine is essentially over.
What's the life of the 521 Pro right now? The one you got the yellow line through.
Well, again, it's sort of a guess into the future.
Right.
What is going to be the effective
I know.
life?
Somebody drops something super powerful on the market tomorrow, it's all done,
And the difficulty adjustment.
Right.
It's sort of a guess. And then the halving is coming up in 30 months.
Right.
So you have 2.5-year window here. In 2.5 years, everyone's sats they're getting for mining gets cut in half.
Right.
Everyone gets cut in half. Everyone who's mining, basically. Well, the machines that I have, they're going to be borderline profitable in 2.5 years. I might still run 1 or 2 just because I want to support the network, but I won't be making money.
What do they do with all the old ones? They can't be repurposed for anything? All that computing power?
Well, they're single function computers, and so they do get repurposed and they get reused. They get stripped down for their component parts, and the chips get used for other things, and they get reprogrammed.
Right.
Oh, good.
Yeah.
Good.
Yeah, and that's another misconception but we'll get into. So anyway, one of the concerns is your jurisdictional risk, right? If you live in Paraguay, for instance, well, is that country going to say, well, we don't want you using our electricity to mine Bitcoin anymore? And if you got a machine in Paraguay, well, then you're in trouble.
Right.
Well, one of the good things at the moment is that we've got a president whose family is heavily invested into Bitcoin and Bitcoin mining. The Trump sons, Eric and John, or Eric and Don, they created,
Junior.
and Don Jr., right? They created this company called American BTC, and it's a mining company, and they want to mine in the United States, and they want to do things American. And so, I mean, I don't think Don Sr. has any idea of really what this means, but his sons do, and that's what's important. So the regulatory, the jurisdictional risks in this country, I think, are very low right now. But as we know, presidents aren't for life. Things could change in 2028 or 2032 or whenever. But right now, things are pretty safe. So.
And it's Eric that's in charge of it. He's the brains. He's the one that was into crypto. Don Jr., he's
He's the muscle.
he's just the goofball. the hanging on the other one's tailcoats, but yeah. Or the other one's he's been into it for many years, so and he's the one that's pushed his father to do all this, so
Yeah.
some good comes out of everything.
We won't talk politics.
No, we're not.
So one of the big criticisms of Bitcoin mining is that it's going to boil the oceans. Who's heard that? Has everybody heard that?
No.
Bitcoin mining is going to boil the oceans.
It uses more electricity than the, whatever.
Than Norway.
A lot more than that. I
Something
think.
in that. I don't know. Anyway, the complaint is that it's environmentally unfriendly. Okay. And this is just really not entirely accurate. And of course, it's propaganda. In the Bitcoin community, we call this FUD, fear, uncertainty, and doubt.
AI is going to use 1,000 times more electricity than this.
Yeah, exactly.
A million.
So I just want to quickly go over these in case you hear any of your friends say, oh, Bitcoin is bad for the environment, you're a bad person. Okay. Well, Bitcoin does a number of things. First, it balances our electrical grids. It actually reduces methane emissions, which, if you believe in global warming, is one of the...
How does it do that?
We're going to get there.
There.
Best questions. Just ask this guy. Just bring him everywhere. It reduces stranded energy, like I had talked about in Ethiopia and Paraguay, and provides financing for new sustainable energy projects. And overall, Bitcoin uses more sustainable energy than any other industry in the world, currently at about 61%. So let's look at these. How does Bitcoin stabilize the energy grid? Well, like today we had a cold snap in Florida, and in Texas they've had cold snaps. And what happened in Texas? Do you remember, like last year or 2 years ago?
Years ago, yeah.
What happened in Texas?
It got very cold, and they weren't
Vampires.
prepared for it. So all the wind farms went down, and
Froze up all the natural gas plants.
yeah,
Oh.
everybody's outdoor water or tankless
It was-
water heaters burst. And,
It was a disaster because they didn't
Yeah.
have enough electricity during the cold
right.
snaps. They figured that their wind farms would provide more than enough electricity
Yeah.
almost all the time, except for these 1 or 2 days where they froze their butts off there, and then it was a catastrophe. And so they didn't.
Surprising for Texas too. You would think Texas wouldn't fall for this crap.
Oh, they've been warned about it. And they didn't
Yeah.
do anything.
Yeah. So, in cases of extreme weather, Bitcoin miners you can turn off Bitcoin miners at the flip of a switch. So what a lot of these mining companies do, they get into contracts with the electricity companies, and the electricity company gives them a very favorable rate with the caveat that if we ever run into an emergency on the grid where we have a high demand for electricity, like during a cold snap in Texas, we will turn off your Bitcoin miners and pay you to turn off your Bitcoin miners so we can have that electricity for our base load.
Oh,
You see? So it balances the grid. It balances the energy demand because electricity, you can't put it in a bottle in like oil.
Once it's gone, it's gone.
And once it's generated, you got to use it. You got to send it somewhere. It's got to be used somewhere. And that's the problem with electricity. And if you don't have these Bitcoin miners to balance the grid, you've got to build what are called gas-powered peak plants. These are plants that are only operated like 2 weeks a year to account for these snaps in demand when it's either very hot somewhere in Nevada or very cold somewhere in Texas. And these peaker plants are very, very expensive and inefficient. And they cost the utility company a tremendous amount of money because they're only used a few weeks a year. Well, who builds a lot of peak gas plants? Berkshire Hathaway. Who owns Berkshire Hathaway? Warren Buffett. What did Warren Buffett say about Bitcoin? Rat poison squared. Why does he hate Bitcoin? Because Bitcoin balances the energy grid and takes away his business for peak gas-fired power plants. He lost an $8 billion deal because of Bitcoin miners. Huh.
Interesting.
Interesting how that works.
He did just recently change his mind.
He has a mind? Oh, sorry. that was unfair. Okay. Methane emissions. How does this work? So when you drill for oil, a lot of times they come into pockets of gas, and that gas immediately gets released from the pressure, and it goes up to the surface. Well, traditionally, oil drillers, they flare that methane. They just burn it. They just get rid of it. Boom. Let's burn it. And what does that do for our precious planet? If you believe in global warming, well, methane emissions are what, like 80 times worse than carbon dioxide, right? So if you believe in global warming, this methane flaring is a big, big problem. Okay, but what could you do with this enormous amount of energy that is being wasted every day, every year, all around the world? You could take that energy, turn it into electricity on site, and make Bitcoin.
You know where else there's methane?
Cows.
Cows,
No.
yeah.
Yes, but also.
A Bitcoin miner attached to a cow's butt?
And-
Yes.
Wait, on the Martin County landfill.
Getting there.
Oh, you are?
I have a slide on that.
Yeah, landfills produce methane.
Exactly.
You see them burning off, there's vents around
Yeah, but
landfills.
not
Okay.
here, not here,
Not here yet.
not here yet.
So anyway, this is actually happening right now, and all the big major explorers and producers are taking their methane and they're putting Bitcoin miners on site because you can't move this electricity onto the grid because they're usually miles away, hundreds of miles away from the grid. But the Bitcoin miner can be operating right there from a generator and then wirelessly broadcast to the internet their hashes to get their Bitcoin. Isn't that just amazing?
Yeah, there's a lot to come from this.
A lot to come from it. So who else is using stranded energy to produce Bitcoin? Well, one of my favorite examples is the little country of Bhutan, in between India and China in the Himalayas. A tiny Buddhist country, I think only of 800,000 people. They're the ones who championed the gross national happiness measurement instead of gross national product. And they have a tremendous amount of hydroelectricity, of course. They were one of the first countries that actually started mining Bitcoin. And they're using the Bitcoin to help their poor country and their poor people. They get about a third of their GDP from Bitcoin mining. It's just beautiful. And other countries are doing this as well. Iceland has a tremendous amount of geothermal energy from the hot spots that they sit on. They're using that stranded energy because it can't do anything with that energy. It's wasted energy. So they're using it to produce Bitcoin. And on a much smaller level, there are little villages around the world, in Africa and South America, who have tiny little windmills, who have tiny little hydro wheels that are producing electricity, and they can produce a tiny little bit amount of Bitcoin that fund these very, very poor people.
Well, with Starlink now, they can hook up to the internet then too.
Yeah.
Or something like Starlink.
Something like it, exactly. So Bitcoin is rescuing stranded energy that we as a civilization cannot use. And we can take that energy, turn it into money that can then be used to help people, that people can buy things that have no access to energy markets. And so this money can be used to then be invest into solar for a little roof in Africa. It can be used for bigger things. So like I already talked about, there's this dam in Ethiopia that's they're inviting miners to come in. Deutsche Telekom is another project where they're using Bitcoin mining to fund their solar projects. Japan is also using Bitcoin mining to.
You sound like a TED's talk. Should,
Thank you.
you know?
We're just a little meetup here. We're very modest here, very modest.
German electricity is so expensive though, it's like 3 or 4 times.
It's because they shut down all of their power plants.
Right,
Exactly.
yeah, boy.
Yeah, funny how that works. So you just said, Amy, landfills, and that's exactly what's going on here. So not only does Bitcoin rescue stranded energy, it also funds sustainable energy projects. It literally cleans up our local environments. And the article on the left is from my hometown's newspaper in Pittsburgh. And Pittsburgh, you might know, is an area in the Appalachian Mountains, there's a lot of coal mining. What is a byproduct, unfortunately, of coal mining is a lot of horrible stuff. Waste slag, they call it. These awful slurry pits filled with all sorts of garbage. And it's garbage and it's toxic. But you can take some of this toxic waste, burn it on site, convert it to Bitcoin and sell it. And all of a sudden you have an industry, people are looking for toxic waste dumps to mine Bitcoin on. The one on the right is where you can use methane coming out of landfills to make Bitcoin.
We have them all over Florida.
Landfills.
Yeah.
So, I mean, I don't think this is possible everywhere. Like the math, it might not pencil out in every case, but people are being creative with energy. And they see that energy stranded is just an opportunity now with Bitcoin. Bitcoin is enabling this. And in a more practical level, in our homes, we can use Bitcoin to heat ourselves. So that's why I turned on my miner in my garage today, because it was cold last night. And I'm going to have it on for the next couple of days. And when it gets hot, I'll just unplug it.
And you have a house up north.
Yep. And people do this in the wintertime. They heat their homes.
Cost per kilowatt hour up there is 28 cents. Double what it is here.
Yeah.
Solar panels?
Yeah, and I put solar panels on my house here, and that's one of the reasons why I
can see
wanted
pool
to
heaters.
mine.
Pool heaters, someone could that with a pool heater. All these pools in Florida would make a.
Oh, that's a good idea.
There are a lot of startups that are they're trying to build regular water heaters, home water heaters.
Cooled, you know?
Yeah.
So there are all sorts of applications
our water
for.
heaters at our condos cost us $11,000 a year to run.
What if you could be mining Bitcoin from some of that heat?
Yeah, but you have to come out of that conversation with the board because.
I know where that goes.
Want to do what?
That's okay. That's okay. So as a result of all of this rescuing of energy, all of this using of sustainable energy sources, all of this cleaning up of waste energy, Bitcoin is probably the most, clean energy industry in the world because of its sources of energy. And it's not boiling the oceans overall. And you look at other industries on this chart on the right, the gold industry uses way more energy to mine for gold. The banking system in general, airplanes. Should we ban airplanes because it uses too much energy? On the far right, I think it's humorous. It has clothes dryers. All the clothes dryers in the world use more energy than Bitcoin. Should we ban clothes dryers? It's really not a matter of, who's to judge that your energy usage is wrong and my energy usage is right. That's what this comes down to. Humans have always used energy for what they think is best. And Bitcoiners know the value of spending energy to create the world's first secure digital money. That's what the energy is used for. And this secure digital money can liberate the entire planet from centralized central banking slavery. What is it worth to liberate a planet of 8 billion people from centralized money, from monetary slavery? What is that worth to us as a planet? To me, the cost of the energy is trivial compared to the potential benefits we could to liberate humanity from the slavery system that we were all born into.
And help the unbanked.
And provide banking, yeah. You won't need banks
All you need
anymore.
is a phone.
Yeah.
The debanked.
The debanked, the unbanked, all the things. So, just to put this in a grander Bitcoin picture, Bitcoin mining is like 1/3 of being a Bitcoiner. So we've got mining, and in previous talks, we've talked about your keys, how to secure your keys, how to buy Bitcoin, how to hold Bitcoin, how to pass it on, all this stuff about keeping your keys safe. That's the other part of being a Bitcoin. And then the third part of being a Bitcoiner is running a node. And the nodes, I think, are probably the most powerful part of being a Bitcoiner. They're more powerful than miners. They're more powerful than the key holders, the Bitcoin holders themselves. The node runners are basically the ones that really dictate how Bitcoin operates. And that's going to be a topic of a future meeting for sure. Explaining how it all ties together and how nodes tie it all together.
And Node doesn't require any special hardware, just a normal computer.
Yeah,
and
exactly.
internet access.
Yeah, exactly. And my
Here
YouTube,
we go, okay.
YouTube is Mark Berger 47
Okay.
is what it is. Yeah.
Very good.
Good.
Yes, thank you, Mom.
You're welcome. Hopefully it was helpful and informative.
It was
Revealing.
Very thorough.
It was, yes, it was very thorough, it was very.